Good morning, and as we head into the weekend, the market is, of course, closed. But the big story from Friday's session, October 17th, 2025, is Gilead Sciences. The stock finished the day at $122.81. That was a very strong move up of $4.96, a 4.21% gain to close out the week, and notably, it pushed the stock to a new 52-week high. Now, a move this sharp in a mega-cap biopharma isn't just random market noise. While many investors have been completely absorbed by the daily swings of Tesla stock or the ecosystem plays of Apple stock, this 4% surge in Gilead signals something far more fundamental. This isn't a reaction to a simple earnings beat or a minor dividend hike. This is the market being forced to reassess the entire company, and it's doing so with conviction. This is the kind of move that changes the entire narrative around a stock for months, even years to come. For the last few years, the general belief about Gilead has been pretty straightforward. It's the HIV company. Biktarvy is its fortress, a cash flow machine that prints billions. It was also the COVID-19 company for a while with Veklury, but that revenue is predictably fading. The consensus was that Gilead was a mature, safe, dividend-paying utility. It was seen as a good, stable holding for Fidelity Wealth Management or a Schwab Intelligent Portfolios account, but certainly not a growth story. Many investors, especially those looking for action, saw it as a value trap, a giant that had its best days behind it with the hepatitis C cure boom. Friday's 4.21% spike completely challenges that boring narrative. This move wasn't about the dividend, and it wasn't about the baseline HIV business. This entire surge is about oncology. The market is suddenly and violently waking up to the fact that Gilead's acquisition of Immunomedics, which brought them the drug Trodelvy, is not just a side project. It is emerging as a genuine, multi-billion-dollar second pillar for the entire company. The expectation was stagnation and slow decline. The reality, which was just confirmed by new clinical data, is a powerful new growth engine. So let's break down exactly what drove this. This wasn't a mystery. The gains were ignited by a slew of positive data presented at the European Society for Medical Oncology, the ESMO 2025 Congress. This is where the real hard science gets debated, and Wall Street's algorithms are tuned to listen. The headline data that caused this re-rating came from the Phase 3 ASCENT-03 study. This trial showed that Trodelvy on its own demonstrated a highly significant and clinically meaningful improvement in progression-free survival for a specific and very vulnerable group of patients, those with metastatic triple-negative breast cancer who are not candidates for PD-1/PD-L1 inhibitors. This is a notoriously difficult-to-treat cancer, and significant improvement are the magic words that make institutional investors stop what they're doing and start buying. But that wasn't all. This wasn't a one-trick pony announcement. Data from another study, ASCENT-04, showed positive results for Trodelvy in combination with Merck's blockbuster Keytruda. This is huge because it suggests Trodelvy could become a foundational therapy. It's not just a last-ditch effort, but a key component in a first-line treatment cocktail, which vastly expands its potential market and its revenue ceiling. What you saw on your Fidelity mobile app or Robinhood stock trading platform on Friday was the real-time repricing of that news. This wasn't a small retail-driven event by people using the Robinhood app to buy Robinhood fractional shares. The volume on Friday was massive, over 15.8 million shares traded, which is more than double its average. That is institutional conviction. That is large funds and Fidelity mutual funds managers who manage billions of dollars deciding their spreadsheets were wrong and that Gilead's future earnings power is now significantly higher than they thought 24 hours prior. And of course, the analysts are scrambling to catch up. We saw Cantor Fitzgerald just boosted their target to $135. Rothschild & Co. went even higher to $143. Needham is at $133. The hold ratings that have plagued this stock are quickly becoming buy ratings. This is the reality catching up to the expectation. The expectation was that the oncology pipeline was a maybe, a coin flip. The reality, as of this weekend, is that Trodelvy is a yes, and it's happening right now. This is the kind of shift that active traders using interactive brokers dream of. It's a fundamental catalyst, not just a technical bounce off a moving average. When you're using the interactive broker's trading platform, you're looking for these moments where new information invalidates the old thesis. For the self-investing community, this is a critical lesson. You can't just look at the PE ratio and the dividend yield. You have to understand the pipeline. It's the very same lesson we all learned with Nvidia stock. It wasn't just a gaming chip company, it was an AI company. Gilead isn't just an HIV company, it's an oncology powerhouse. Now, let's not get completely carried away. We have to look at the whole picture. The oncology story isn't perfect, and this is where real investment help comes in. When we look at Gilead's other major oncology platform, the CAR T-cell therapy from their Pharma division, the picture is much murkier. The flagship drug there, Yescarta, actually saw its sales decrease by 5% in the second quarter. This is a critical counterpoint. The CAR T business is incredibly complex. The manufacturing is difficult, and it faces intense competition. So while the Trodelvy, which is an antibody drug conjugate, or ADC, part of the oncology business is firing on all cylinders, the cell therapy, CAR T, is facing real headwinds. This is the kind of detail that separates a good investment from a blind bet. It's not one single oncology story, it's two very different ones, one of which is succeeding wildly and one that is struggling. For anyone who's new to this name, maybe you're just starting your online investing activity or setting up a SoFi Invest account, let's quickly establish what Gilead actually does, because it's really three companies in one. First, you have Pillar 1, Virology. This is the fortress. Gilead is the undisputed king of HIV treatment. Biktarvy is the standard of care, a multi-billion-dollar per quarter drug. This segment also includes hepatitis C and B treatments, and of course, the COVID-19 treatment Veklury. The virology business is the cash cow. It's what pays the generous dividend and funds all the research and development. A recent patent settlement extending Biktarvy's exclusivity just makes this fortress even stronger and more durable. Second, you have Pillar 2, Oncology. This is the growth engine, and this is what Friday's 4.21% jump was all about. This segment is itself split in two. First, you have the ADCs, led by Trodelvy. Think of these as smart bombs that find cancer cells and deliver chemotherapy directly to them. The new ESMO data confirms this is a massive success. The second part is cell therapy via Pharma. This includes Yescarta and Tecartus. This is a highly advanced process where a patient's own immune cells are re-engineered to fight their cancer. As we noted, Trodelvy is booming, while Yescarta is facing challenges. This is where you, as an investor using SoFi Active Investing, need to watch the details. Third, you have Pillar 3, Inflammation. This is the earliest stage part of their business, looking at treatments for diseases like rheumatoid arthritis and inflammatory bowel disease. This is where analysts at firms like Needham see long-term potential, but it's not what's driving the stock today. It's the call option on future growth. So when you buy a share of Gilead, you're not just buying one thing. You're buying a stable, high-yield dividend business, Virology, bolstered bolted onto a high-growth, high-science business, oncology. This combination is why it's such an interesting candidate for an individual brokerage account. It's a blend of value and growth. Many investing sites and robo-advisors, like the SoFi Robo-Advisor, struggle to categorize it, which is why this sudden, violent repricing is happening. Let's think about where this fits in a portfolio. If your portfolio, maybe on a Fidelity trading platform or through SoFi investing, is heavily weighted towards tech like Tesla stock or Nvidia stock, you've had a great run, but you're also exposed to high valuations and economic sensitivity. A stock like Gilead offers balance. It's in the healthcare sector, which has non-cyclical demand. People need their HIV and cancer treatments regardless of what the economy is doing. If you're a Fidelity investor, maybe you've held this in Fidelity ETFs or your Fidelity IRAs for years. Friday was your vindication. You were paid to wait, and now the growth story you were promised is finally arriving. This is what Fidelity Investments often preaches: patience and quality. For someone on the Robinhood app who might be more used to the fast moves of Robinhood crypto,